How do I choose the options that I'm day trading? How do I choose? How do I choose a strike price? How do I figure out where I want to buy and all of that fun stuff? Talking about the entire breakdown of how I choose which strike price options, the calls, the puts, and all that fun stuff right here in this video. So make sure you stay tuned.
Yeah.
What's going on, guys? Patrick here today talking about how I find the options that I'm looking to trade, when I'm buying, the calls, the puts, the strike prices, and all that fun stuff. I'm going to break down exactly what I'm looking at, what I'm looking for, and how I'm trading options with Interactive Brokers, the preferred choice for the channel for myself. Interactive Brokers, if you want to learn more, there's a link down below to check out the Trader Workstation. This is the setup that I'm using, and I'll kind of show you guys exactly what I'm looking at and how I'm going about trading options. All right, so pulling up the Interactive Brokers Trader Workstation here, you can see what we're looking at. Right now, we've got the book trader over here on the right, and then I've got my actual candlesticks, my chart that is showing the price of the call options. These are the 424 call options we're looking at right now. So in the morning when I wake up, the first thing that I want to look at is where we are with the market. So if we look here at the chart on the SPY, you can see this morning, let's get rid of everything that we see there. That way you guys get an idea. So pre-market, the pre-market high was 424.60. So I know that there's resistance at this level. There's a key area at that $25 level. And then we've got that pre-market support was basically right here at the 422, 423 area. So what do I want to figure out? I want to figure out, number one, if we break to the upside, then we're going to go higher. So I want to be bullish on the overall market. This is the SPY, the S&P. So I'm looking for a move over 425. So I'm looking to trade call options that might be, 426, 427 call options on the SPY. So for an upside move, I'm looking for a move up to the 430s based on what I see with the chart. Seeing that on Friday, that 430 area was resistance, and that would basically put us in terms of target-wise. We break above this resistance, our next target for resistance would be 430. So the idea here is that the market would then squeeze up here to 430. That's about a 1.4% move. If we break over 425, I buy the 426 call options, and then we get a move to 430. That's a $4 move. The difference in that 426 call option being the strike price being 426, and if it moved to 430 or higher, the premium on those options would be worth $4 or more. So you understand, the idea here is if I'm buying 426 and it goes to 430, I would make $4 per call on that option or more depending on how high it went. So now I go over here and I look at the 426 call options at open. At open, they were trading for around $1.25. Now I'm looking at this like, okay, the idea here is that if this goes to 430, I would then have $4 in premium. If when the market opens, we're already trading at $1, that means I only have $3 in premium in profit there. So I really am looking for opportunity to buy as low as possible on these options because that'll make the upside that much more, knowing that there's a $4 move over 426. So the 426 call options, you can see they basically have been selling off now. The market kind of crashed back down. But at the lows, let's say they're at 50 cents, these actually ended up running from the lows this morning from 420 up to about $1.36 for a 172% move there. So I'm basically looking for those breakouts over resistance if I'm trying to get long, especially looking where the VWAP is and looking at these areas. Okay, I'm like, okay, if we break over 425, the idea is I buy the 426 call options, and then we get that move up to 430. That would be about a $4 move there in the premium. And then based on where these options were trading at, I would think these options would probably be around $1.50 to $2 at that 425 level there at open. So that would be my upside play, right? I know 426 would be an area that I want to watch, and then I know I've upside move to the 430 area for a bullish move to the upside. But what if I think the market's going to go down like I believed it would today? We talked about on the live stream the idea of the market moving down to the 420, 418 level. What do I do then if I want to buy puts? So I'm going to go here. I'm going to look at my options chain. Obviously, I know if we're at, if we're opening at 422, 423, that if I go down here and I look at the puts, I can see that maybe, okay, I'm looking at the 418s. The 418 puts, I ended up buying these this morning, and you can see how this kind of turned out, how this went. So we had some actually pretty nice moves in these options. Now I'm looking at the SPY chart again. I'm showing you guys kind of, okay, I know where my upside move is, but what's my downside move here? My downside move would put us down here, the 417, 415 area to the downside. So I'm thinking, okay, if we break below 422, I could buy the 420 options, the 420 puts, but I'm going to buy the 418s because they're maybe a little bit better price, and I'm looking for maybe a little bit bigger move. So I'm a little bit more out of the money, but in general, I'm normally trying to stay within $2 to $3 in the money options. And that way, especially on these same day expirations. Remember, these options are expiring today. So on Monday, Wednesday, and Friday, these options are going to be expiring the same day. And then Tuesday and Thursday, you're going to be expiring the next day. So I'm always trading the closest expiration options when it comes to trading these options. So basically looking at the market, I'm like, okay, we know that the 422 area is support. So I'm looking at the 420, 419, or 418 puts. And then I go back over here to my broker. I pull up the 418 puts. I see it open. They're trading for around 80 cents. I end up jumping in here. We get a move up to $1.50. You can see at open, we got about a 80% move. So not the biggest move to the upside, but we still got that move to the upside there. And that's what we were looking for here at open. And that's exactly what we got. So the game plan really comes down to figuring out, okay, if the market's opening at that 422 level, where is an area that I would look to jump into call options, or where would be an area that I'm looking to jump into put options if the market is going to go down. Now, obviously, the worst thing that can happen is if we go sideways. You can see how the market went sideways for most of the morning. We kind of went ding, 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 touching that 424, pulling back 420. Now, what happens with this is you're going to get the premium burn, especially on these same day expirations. You're going to have the options where earlier in the day, maybe the market's, at 420, and those options are trading at a higher premium. They push up, they burn, they go sideways, and then once the market gets back to that 420 level, those 418 puts still might be cheaper than they were earlier when it was already at that level. So that's one thing to think about. The worst thing that can happen when you're buying these same day expiration options is if the market goes sideways. That's the last thing that you want to happen. You don't want the market to go sideways. If it goes up, it goes down. There's opportunity to trade options. But the problem is if the market's just going sideways, it's not making clear moves, it's not going up fast, it's not going down fast, well, those options just go sideways and the premium ends up getting eaten. And you might end up at the end of the day, like let's say, at the end of the day, even if you have the 418 puts, at the end of the day, if let's say the market closes at 418 and you paid $1 for those 418 puts, you're going to walk away with a loss because those puts are basically only going to be the difference in the value of where the market's at and those premium on those puts, if it makes sense. So let's say the market closes at 418 and you paid $1, and well, there's only, let's say, it closes at 417.60 or 417.70. That's only a 30% premium, basically the difference between that contract, the strike price, and where that option is closing. So the key here is I'm really looking for a strike price. A strike price is basically where I need that option to be depending on where it closes at expiration if I wanted to exercise that option, but I'm not exercising options. So I really am just looking for opportunity to trade into volatility, and I'm using options because it allows me to really leverage a small amount of money in a cash account. I don't need thousands and thousands of dollars to short the overall market. I don't need thousands and thousands of dollars, to short a stock like Tesla or Twitter and things like that. If I buy an options contract that is only $1 in premium, well, that, represents 100 shares, and that's $100 to basically buy that options contract. And then if I sell that options contract, let's say if I sell it for $3 or $4, that would basically be like a $200 to $300 profit based on entering, buying that contract for $100. So that's kind of what I'm looking at. I'm always looking at where the market is in terms of where we're opening, and then the idea of how high we could go or how low we could go, and then kind of basing my option entries based on that. So if I think the market's going to go lower and it's going to break below 420, I'm looking at those 418 puts. If I think the market's going to go higher, well, then I'm looking at the call options that would be above kind of that breakout on resistance. So really simple idea. It's not rocket science. We're looking for overall trends, and we're looking for the market to make a move. Right now, the market going sideways is killing those options, and it's not really a great day for these options to be trading, and that's kind of just how it goes. Some days you're going to have a huge move, and that's when the options are really going to shine. And then the days where we go sideways, you're going to get eaten up and you're going to end up just kind of getting screwed on your premium there. And those are the days where we kind of just sit on our hands, we wait for opportunities, and we wait for the next big kind of trending movement day. Right now, the SPY kind of trending at that 422, 423 area. That's pretty much exactly where we opened at, 4 or 5 hours ago. So those options are just basically going sideways at this point and kind of chopping around. So you got to be careful when we get into a sideways market that you're not holding on to these options for too long. You really want a solid trending market to be trading options.
Yeah.